Homeowners insurance is a necessary, unavoidable part of life, even if you aren't a homeowner. Some landlords, for example, may require their tenants to have renters insurance to cover their personal property. If you are an owner, all mortgage companies require borrowers to have insurance coverage and won't make a loan without proof of it. Homeowners insurance also provides liability coverage against accidents that occur on the property, so it is in your best interest to secure proper protection. It's important to have a basic understanding of the different policy types when shopping for homeowners insurance. Different policies offer various levels of protection relative to the needs of the homeowner and the residence type. For example, the H04 is a standard renter's insurance policy, which offers protection for the renter's personal belongings against 16 named perils, which means that only the perils specifically listed are covered. We will cover what exactly perils mean shortly. An H06 policy is designed for condo owners. It offers walls-in protection. It's a named peril form for structure and personal property. H01 and H02s offer very basic coverage, with H02 offering slightly more coverage than the H01 form. They both cover a limited amount of named perils. H03 is the most common type of homeowners insurance as it offers a broad range of coverage. It is an open peril policy for structure, which means it covers almost any peril except those specifically excluded, such as flooding. It is a named peril policy for personal property. The H05 is a slightly beefed up version of the H03. Just like H03's, the H05 covers almost any peril that isn't specifically excluded for both structure and personal property. As a result, they tend to cost more. Finally, the H08 policy is designed for those with historical homes or homes that are built more than 40 years ago. For example, if the home was built with plaster walls, replacing or repairing the walls to the original standard would be expensive. It covers named perils for both structure and personal property. The policy will not go as far in covering your home and personal belongings as an H03 or H05. In the event of a loss, the payout would be based on an actual cash value basis rather than a replacement cost basis. And we will go over what exactly actual cash value and replacement cost mean. Perils. What are they? Peril is a hazard or event that results in loss or damage to property or home. An H03 policy specifically excludes damages caused by the following perils: freezing pipes and systems in vacant dwellings, damage to foundations or pavements from ice and water weight, theft from a dwelling under construction, vandalism or malicious mischief in vacant dwellings, latent defects, corrosion, industrial smoke, pollution, settling, wear and tear, pets, other animals, and pests, weather conditions that aggravate other excluded causes of loss, government and association actions, and defective construction, design, and maintenance. Flood insurance is a very important. It covers damage resulting from flooding. Flood damage is generally an excluded peril, so most standard homeowners policies don't include it. It is offered by some specialty insurers, but it's most often purchased through the National Flood Insurance Program. So, where do you find all of this information once you have your homeowner's insurance policy? You'll find it on what is called a declarations page. The declarations page identifies the kinds and amounts of coverage you have and how much it will cost you. Let's look at a sample declarations page. There is no standard for what a declarations page is supposed to look like. Each provider has a different style when presenting this information. The information included is always generally the same. On my example, you'll find the name of the company. You'll usually find an address to the company included, which can be useful in the event that you need to correspond by mail to settle a payment or to send signed documents. You'll also find your policy number as well as the effective dates. You'll need to know that number should you ever have to discuss your plan with an agent or customer service representative. The named insured is listed here, as well as the mailing address. As with all important documents, it is pertinent to double check that the mailing address is listed correctly. For example, if you are a landlord, you often have a different mailing address than the actual insured address. Both addresses should be listed clearly on the declarations page. The policy period is outlined here. Be aware of the effective dates. If you let your policy lapse, your mortgage company might force insurance on your home. And insurance provided by mortgage companies is not cheap. Mortgage company is often listed on the declarations page as well. And below we have your coverages. This is one of the most important parts of this document. There are two sections to your coverages. Section 1 covers your dwelling and personal property against a variety of perils. Whether they be open or named perils depends on the policy form you chose when purchasing your insurance. Section 2 includes liability coverages for the insured and their property. This comes into play if, for example, an accident occurs on the insured property and results in medical expenses or a lawsuit. Coverage A is for your dwelling. That would include your house and any attached structures, such as a garage. Here it's denoted that it's at a replacement cost value, which is what is very common for coverage A, at a limit of $200,000. Coverage B, other structures, includes detached structures, such as sheds or detached garages. The limit of this is always going to be 10% of your coverage A limit. Personal properties, coverage C. Here it's at replacement cost value. This covers your home's contents or personal property. Also covers personal belongings you carry while you're traveling. The limit of this coverage is 50% of your coverage A limit. Another important thing to consider is the amount at which your belongings will be replaced. Actual cash value is standard, though full replacement cost coverage can be typically added at an additional cost. Actual cash value pays to replace the home or possessions minus a deduction for depreciation. Replacement cost pays the cost of rebuilding or repairing the home or replacing possessions without a deduction for depreciation. Many companies and lenders require homes to be covered at replacement cost when determining adequate coverage. It's important to keep in mind that the cost to rebuild a property will generally not equal the market value of the home. You might pay $1 million for a shack in Manhattan, but the price for the materials used to build the shack would probably not equate to the same price. Coverage D is the loss of use. Loss of use provides coverage in the event that your home is rendered unfit to live in. It covers additional living expenses and will pay for temporary living arrangements up to the policy limit. So here that would be $20,000 for this specific policy. Here's section 2. Coverage E is personal liability. Liability coverage is a vital component of a homeowner's insurance policy. It protects you against damages or injuries caused by you or on the property. Coverage F, medical payments to others, covers costs incurred on the property by those not listed as residents of the household, regardless of fault. And finally, we have deductibles. This is your out-of-pocket expense, so what you'll pay for any damages before your insurance covers the rest of the financial cost of your claim. For example, if your home sustains $15,000 in damage and you have a $2,000 deductible, your company should pay out $13,000 for the claim. One way to lower your premium is to raise your deductible. However, it's good to check if the change is worth making. For example, you could elect to raise your deductible from $1,000 to $2,000, but your total premium will only change by $50 or so. It is up to you to determine if saving the $50 is worth risking a larger out-of-pocket expense, should you have to file any claims. On the bottom, you'll find the total premium. A lot goes into determining this final number, including location, so proximity to emergency services or proximity to the coastline, construction, roof type, and policy form. So again, H03 versus H05. You're going to pay more for an H05 than you would if you had an H03. Thankfully, there are many, many ways to lower your premium. We already discussed one way, which is to raise your deductibles. You can get a discount for having a home security system in place. If you replace your roof, for example, upgrading from a wood roof to one built with metal, slate, or asphalt can result in a sizable discount. Some companies offer a discount for bundling home and auto. I'm sure you've seen all the commercials. If you own your home outright and have paid off your mortgage, you'll usually find a drop in premium price, as companies tend to believe that if your home is 100% yours, you'll take better care of it. There are tons of discounts available for fire prevention. For example, having an upgraded fire alarm system, such as sprinklers or having fire extinguishers on hand, will go toward a lower rate. Again, proximity to a fire station or a hydrant can also lend to a lower premium. If you live in an area that is at risk for a disaster, such as a hurricane, you might want to look into discounts for wind mitigation. Wind mitigation is when you add features to your home which provide additional protections against high wind speeds. The first step to securing discounts for wind mitigation is by hiring a licensed inspector to perform a wind mitigation inspection. This inspection will determine several factors such as roof covering, roof deck attachment, roof shape, water resistance, opening protection. That would include high impact windows, hurricane doors, and shutters, as well as roof deck attachment. You will need to submit the final inspection with photos to your company for review. All home insurance providers in Florida are required to offer wind mitigation discounts. However, the discount amount will vary by provider. So that covers the very bare bones basics of homeowners insurance. There's a lot more to it, but just to get a very basic understanding of what you're looking at when you get your policy, finding the right insurance policy can be a little bit bewildering. Pricing, policy limits, and so many coverage options can make the process seem kind of confusing. While you might have a solid baseline understanding now of what goes into your policy, remember that it's always best to refer to your agent if you have any questions at all.